Hello traders, Gary Wagner here about 11:30 in Honolulu, 5:30 in New York on Wednesday, 23rd day of September 2015. This is Trending Markets. We do have the Dow Jones Industrial Average off a little bit, off about 1/3%. It's not the move per se that has me so alarmed. It's the pattern that we do see forming in the market itself. Currently trading at 16,279. Now, the real key to this market right now, as far as I'm concerned, on a technical basis, is the fact that the overwhelming characteristics of this market had been that we had an ascending bottom, meaning a series of higher lows coming into the market, and in essence, a flat top, a series of tops, which we had a defined resistance area roughly in this same area, roughly at 1680. Now, you do have this one pop above that, but aside from that, you are getting that. Now, we have the range compressing. My sense was that we would actually see this market break to the upside, but over the last few trading days, and we noted this specifically on yesterday's trading activity, we've noticed a real change. First of all, you can absolutely see that we have a rounded top in the market, no doubt. The second thing is when we look at this series of ascending bottoms, we definitively, this again being our daily chart, definitively broke through this particular price point over the last couple of trading days, and that tells me that we could see this market heading lower, because according to the theory of a compression pattern, such as a pennant or a triangle, as it reaches the apex and that range tightens, the tightening of range is a building of energy. As that energy builds, when it gets released, once you have a break above or below the particular pattern itself, and once you get that break, the move should be fairly sizable based upon the energy being released. So while we don't have any positions in the S&P, I had been looking for it to go up from this breakout. It's too early to tell, but it does appear as though it might in fact break down. We'll definitely want to take a look at that over the next couple of days. But in terms of real uncertainty in the market, you really have to take your hat off to crude oil. Crude oil has been all across the board, currently trading 44.60, off about 3.8%, almost 4%. In terms of how it's tracking lower, down $1.76. And the key as far as I'm concerned is the fact that we are now in a consolidated trading range in oil, a defined $4 range. But as we go through the stages of trading during that day, we are actually filling almost the entire end of the range. So we're getting some real whipsaw markets and real volatile markets. And what I mean is as follows. Obviously, very, very easy to define this downtrend. Series of lower lows, series of lower highs. Market hits this bottom, you get one day, you get 2-day match. Although you have a lower day, it starts to trade off. So we have this tremendous spike up, and we all recall that spike up because we had this market move, roughly almost 20% in about a 3-day trading period. But since then, we can really characterize the market as having a flat bottom with support at $44 and a flat top. So we're trading absolutely in a defined trading range, 48 on the high, 44 on the low. But here's the key. As far as I'm concerned, what I really see more than anything else is it is almost filling up this entire range. Look at these trading days where it's up 3 and 4%, down 3 and 4%, up 3 and 4%, down 3 to 4%. So you're getting these tremendous days in which you're seeing this market move from one end of the range to the other to close near the lows or near the highs, depending on whether it's an up day or a down day. Traders, my only sense on this market right now is that we don't buy it unless it's above 48. We don't sell it unless it's below 44 for a long-term trend. Traders that are really looking to capture real short-term moves in the market, and these are within the day, so you'd have to day trade them, but you want to be a seller up around 48 and a buyer down around 44. It's not rocket science to see that. However, this isn't the real test of the tape, so to speak, because you're looking at a daily chart. You're not really looking at the kind of intraday volatility that can be seen in this market. So to give you some idea of what you're looking at in terms of intraday in the market, this is obviously a intraday hourly candlestick chart. You can see the beginning of a day here, the beginning of the 23rd here, and the beginning of the 21st. So we've got 3 days, 3 trading days in there. So for example, take Monday. Monday, it opens roughly near the lower end of this range, 45.20, and then over the next set of hours trades to a high of about 46. And then look at this defined downtrend, hour after hour lower prices. Then you get on yesterday's trading activity for the majority of the first part of the trading session, it trades roughly 45.20 up to about 45.80, and you get this big spike. Then it hits this top here, and then that's to be followed by today's trading activity, opens quietly, trading up near the highs, and then over a period of 3 hours, 4 hours, moves down to these lows. So you've got some extreme volatility in the market. You can absolutely sell it at 48 or 47, buy it at 45 in terms of a day trade, but in terms of a position trade and looking for overall direction, traders, we absolutely need to see it break below 44 or above 48. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.